So today we have the privilege of spending the afternoon with founder, board member and family scion Salvatore, or Sam Senior Tarascio, and board member, managing director of Salta Properties, Sam Tarascio. Gentlemen, thanks so much for your time this afternoon. Sam Senior, I thought we'd start with you. You immigrated to Australia from Italy, or from Sicily, in fact, 70 plus years ago now. When you reflect on the past 70 years or so, what are your proudest achievements?
Obviously, the proudest achievement, apart from family achievements, and we're talking, I assume, business achievements, was the start of the Westgate Logistics and Salta business activities. But one of the things that has really made me very proud is that, when you arrive in Australia, you tend to be, in those days, you were not the equal to your peers because you were a migrant. We'd fought in the war. Italy was fighting against Australia in the war, and so we weren't terribly well accepted, quite frankly. Talk of discrimination today, there was really quite significant discrimination. But, and obviously the objective was always to become the equal of your peers, and that really gives you a drive to try and succeed.
So you arrived, I believe, at age around 5 years old, or
5.5.
5.5. So tell me about your first experiences here in Australia, and I suppose the second part of that is, when you reflect on your career today, did you ever think that what you've achieved would have been possible when you were 5.5?
Well, certainly not when I was 5.5. Obviously, it was a very difficult period, but if you can imagine, 1950 is when we arrived. Very few people here that spoke Italian, and we arrived on a very small ship, 7,500 tonne, which effectively was like a surfboard, because if you compare the 800 passengers on that ship to 800 passengers on a cruise ship today, a cruise ship will weigh in at about 100,000 tonnes, and this ship weighed in at 7,500 tonnes. So you can understand that the high waves were not something that it coped with. So that was very difficult. The journey was very difficult. A lot of people, or most people, were actually seasick. Some people died, and so as a 5-year-old, to watch someone be put into a Hessian bag and thrown overboard because there was no medical facilities, there was nothing on that ship. It was the way that they handled the corpse. So it went over. So that really sort of hit home hard. And of course, once you arrive in Australia, you get put into a class with 30 people, 30 kids, that none of them either want to talk to you because their parents have said, don't talk to them because we fought against them in the war. And none of them anyway spoke Italian, and I certainly didn't speak a word of English. So that really was a very, very traumatic time, and would have been for any migrant child that arrived at that time.
And then, I suppose, from a business perspective, and we'll get into the Salta business shortly, but what are the lessons, the main key lessons that you've learned throughout your career that you can pass on?
There's no reward without risk. So for a start, you've got to start to accept that there is a risk element with everything you do. As to the level of risk that you take, that can differ from person to person. But you've got to be prepared to take a risk, and you've got to be prepared to back yourself to the degree that you can do things that you haven't done before. I talk to a lot of people these days, and I really shudder when I hear that I say to someone, can you do this and this and this? And they say, oh, I've never done that before, so I can't do it. So it's an immediate block, which is not really conducive to, I suppose, maybe developing a business in later years, because you're just blocking your abilities. Believe that you can do anything, because most things are fairly practical.
And you've ridden the great highs and no doubt the suffering lows as well, and the challenges throughout. You've been a board member of the business since the beginning. How have you managed to navigate the business on such a stable sort of path and footing over the years?
First of all, believing in yourself. Secondly, taking on the opportunity as it comes past, and you've got to have the ability, I suppose, to identify an opportunity, because we all have opportunities that pass us by. And unless you identify them and grab them, that's like a ship sailing away into the never never. It just goes and never comes back. So when I started business, I was actually working for a pharmaceutical company, and they sent me to Altona, where they had a plastics plant, and it was during that visit that I sort of identified pretty much all the opportunities that I used and followed up to start the business that is Salta today. They were leasing a warehouse, they were leasing it from the government. It was old, it was very badly designed. I'd never done anything like that before, but what I did realise was that if I could give them something that was worthwhile, they might lease my warehouse. And that really was the start of how my mind started to tick over in terms of property development. So just to praise it all, because it's a very long story, the second opportunity came when I realised that they used to move the product from the plant to the warehouse. So, well, it takes up part of my book, but one of the major businesses that we had that we sold, 10 years ago, 12 years ago, whatever it was Westgate Logistics, which really just started off by me saying, well, they need trucks here. The contractor that is doing the work is running clapped out things that are really bad news. So I convinced Turks to allow me to buy a couple of trucks and start to do their work. That grew to a 2,000 person business, which was a national business when it was sold. So you've got to see the opportunity, you've got to grab it, you've got to move forward with it.
And Sam, as I understand it, you joined the Salta Group business in around about 1999 or thereabouts, so about 22 years ago now. Tell me about the responsibility, the weight of responsibility that you feel in sort of carrying the business forward to the next chapter.
Look, I've, as you say, I've been in the business for 22 years now, and that's gone really quickly. 2005 was actually when I took my current role, which is the role of Managing Director of the business. And to be honest, that at the time felt like it was very early. I was only 30 years old. I just had my first child, and so there was a lot of responsibility with that. And Dad comes along and says, "Hey, I think it's time to step up." And you sort of think very carefully about that sort of thing, because it is a massive responsibility. It's a family business, and you're being asked at a very early age to do it. Now, some might say, that was a reckless decision at the time, but I think in hindsight now, having been in the role for 16 years, I've had the benefit of maturing in that role with Dad by my side. As well as a number of other very long-standing, very trusted people that Dad had around him over the years as he built the business as well. So I was really able to, really have the training wheels on to a certain degree for the first probably 4 or 5 years, until you really started to feel confident in the role. And so, I've been doing it now for 16 years. I feel very confident in what I'm doing. I feel very confident in the strategy of the business. But, again, it is a growing family business, and, in a sense, I have the responsibility for ensuring that the business performs for the family, both now and into the future. Where I'm well supported now by not just, Dad still, being in the business on a daily basis as well, still a very close touch point. We talk daily. We talk about what's going on in the business, and we talk about the strategy, but we've also formalised the business a lot. So we now have a business board which is comprised of family members and also 3 external independent board members. And we also have a family board structure which is part of our overall governance that sits above the business board and makes decisions over a certain threshold. So it's a big responsibility, but we have been very cautious in the way we've implemented the transition over the last 15 years, 16 years. And, I've been very well supported in that. So, big responsibility, but I feel like we've done it in the right way.
And take me through, if you could, and this is sort of going back on, your early days, take me through some of your earliest experiences growing up with your father and the family around. Presumably he was often at work, really in the trenches growing the business. What was your sort of first experience of growing up here in Australia, but also of the family business?
Well, look, you hear a lot of stories of families of who've got a very entrepreneurial figurehead and founder, and you hear stories that I never saw my father. He was always out working, and he was never really entrenched in the family. He was always entrenched in the business. And I think what I was very lucky, and myself and my brother and my sister have been very lucky with, is that Dad, yes, he was very entrenched in the business, but he absorbed us in that. So I spent a lot of time on the weekends in particular going out with Dad to have a look at our sites. Back then you actually used to get out and work on sites. You'd be on the excavators or on the tractors.
I was driving an excavator at about 4 years of age.
On the graders, and you couldn't do that nowadays. I mean, you'd be the OH&S rules wouldn't like a 5-year-old driving around in a grader. But that's what we used to do. I used to go to site with Dad at the time. Probably made a mischief of myself, but it was a really great introduction to what we've done as a family since inception. So yeah, they're one of my really, I think, fond memories. I don't ever feel like the business took precedence over family, because I think Dad was able to sort of merge the two things together quite seamlessly.
And give us an insight, if you could, into the business today in terms of key personnel that are involved and then the key business lines or divisions.
Yeah, so like I said earlier, we have a very strong governance structure with the family board and then the business board. We have Dad still in the business as the founding director. He has the advantage of being able to sort of pick and choose what he wants to get involved in, and there are certain aspects of this business which I think he brings a huge amount of value to, and wants to remain involved, as you mentioned, particularly in the industrial side. With the background with logistics, it's something that you have a real passion for, and so you're heavily involved. But then, as the business has grown, we've had to really develop a robust management structure. Family businesses have to recognise that there comes a point in time where you can't just rely on family and the small amount of sort of senior people that you might have around you as you grow a business from something new to something substantial, and then keep going from there. So we have a senior leadership team, and then we have an operations team, and basically what they run is the key components of our business is our land banking. So we've always been, and I think we get to this later on, we'll have a chat about our strategy, but a key part of the business has always been identifying prime pieces of land and land banking them so that we're ready to develop them at the right time. So that's the next part of our business. We have our development management and project management, effectively our delivery team, and then from there it flows into our asset management team. And then surrounding all of that, we have all of the usual HR and finance, IT, all of that. So pretty I guess simple business structure, but we've certainly grown in the last 12 months. We've actually put on 20 new roles, which is about a 30% increase in our headcount in the office here. So considering what we've been through over the last couple of years, and it's reflective of the pipeline that we've got, that we've had to resource up in the way that we have.
At this point, I should also mention that there are 3 other family members involved, being Lisa, David and Christine. One in particular that I wanted to ask you about is Lisa. She rejoined the business, as I understand it. Perhaps take me through Lisa's role within the Salta Group business today.
Yeah, so she's an investment director within our Salta Capital business. So Salta Capital is run by my brother David, who's the CEO of Salta Capital. Salta Capital started out essentially as a platform for investing in arm's length opportunities that were related to our core business. So a lot of property technology, for example, and the opportunities we were looking at were those where we could add value to the investee company and they could add value to us. It's moved well beyond that now, and we're a lot broader in our assessment of different opportunities. It's a little bit like a small a family office or the start of a family office and a diversification strategy for the business. So Lisa, who's a qualified property lawyer, and that's been her background. So after she left us, she became a property lawyer, and she spent many years in that area, building up a substantial business in her own right with her husband. And since she's come back, she's basically assisting my brother in assessment of opportunities within the Salta Capital business.
Sam Senior, one thing that I did want to ask you is there's obviously a lot of disputes in family businesses. You had the foresight to hand the reins of managing director over to Sam in 2005, I think he said. What sort of prompted that decision? Because you don't often hear of family businesses of this scale doing that. Often there's legal disputes that are involved and that sort of thing. What guided that decision?
Oh, look, I suppose the decision to move away from the business early enough was that, in my view, I really needed to be around. I mean, I don't have any intention of retiring. I'm 77 and I hope to keep going for a few more years. But at a point in time when you've still got the energy and the patience and the resilience to be able to mentor and help your family, my child who's now running the business and is very modest in the way that he's joined the business and what he'd done beforehand. So there was a level of experience already there. He'd been in agency, he'd been working with the business for a number of years, he'd been out on site since he was about 4. So while 30 was a young age, it was certainly the right age in my view, because I've now been around together with him for the whole journey and I'm still here. So I think it's worked very well for us.
And what about managing the broader family dynamic of having David and Sam and Lisa involved? How have you managed to ensure that everybody's sort of comfortable having a role in the business without there being, too much crossover or too many arguments?
Well, I think the main thing is to instill in your family members that they are family members, but they have to find their own way, and there isn't an as of right, because you're born into that. My kids, in all of them, have no animosity or jealousy about what one person is doing as against another. It is a fortunate position for me as a parent because, as you know, there are many, many disjointed families out there that are at each other. And I suppose 3 years ago we made the move to appoint PwC to properly structure the plan going forward as to how the family would function and how the business would function. We're all signatories. There's a thing up there that tells you what we do, and I don't think we've had any significant, I suppose, problems within the family as a result of either the business or the finances or anything else. The three of them are and do act independently in their own right and don't look to lean on anybody's shoulder in the things that they do. And I think that's a very unusual set of circumstances.
One more before we sort of move on to a different topic that I wanted to ask about is that you mentioned how different Australia was in the 1950s and 60s and 70s and how difficult and challenging it was for migrants back then. Do you see more of an opportunity for migrants today, or do you still see that there's quite a lot of challenges for them to overcome?
Look, it's a different Australia today. When we came out, there was a level of resentment towards migrants, and it was a difficult set of circumstances in terms of the language and the help the government was giving, because there wasn't much help at all. But the country was a new country and there was enormous opportunities. And many migrants that have really done very well in this country did so because of the skill base that they had and the fact that the country needed that skill base. And they've evolved and grown with the way that Australia has grown. But the work ethic of those migrants, that first tranche of migrants that came out post-war, was enormous, because they'd sort of experienced the devastation of war, the lack of commodities in Sicily in particular. You couldn't buy food, it was just devastated. And so you come out already with a work ethic that is very, very strong. Happy to work as many hours as you need to work to achieve the objective. That makes it a bit more difficult, and having said that, it's a far more mature country. So as a country matures, yes, there are opportunities that are created which are different, but I suppose the competition is probably a little bit stronger now than it would have been in those days where, you know, if you had a skill, you had a job, and there were plenty of those jobs around and plenty of opportunities to expand that business. So it's just a different set of circumstances at the moment.
So Sam, you took over the business in the year 2005 and you were aged 30. What are the immediate opportunities that stood out to you, and how have you gone about sort of building the business up and creating different business lines over the past 15 or 16 years that you've been in charge?
Look, I think one of the things that that Dad probably recognised at the time was, you know, we talk about his upbringing and his evolution as an entrepreneur and building the business. You know, on the smell of an oily rag with a lot of gut feel and grit and determination. And I don't think we've lost any of that. But at the same time, I came through a completely different path, clearly. Okay, you know, I came up working in the business side by side with Dad, learning from someone who knew what he was doing, whereas he was learning on the job, if you like. I had a formal education, you know, gone through school and university and done the formal qualifications, you know, gone and done the work experience. And I think what Dad probably recognised at the time was that the business needed to be probably more professionalism in terms of the way some of the systems, procedures, the technical aspects of the way the business are run, that needed to be looked at. So we didn't want to lose the entrepreneurial you know, flair that I suppose Dad had and the business had in terms of finding opportunities, but the way in which they're implemented and the way in which they're run and managed, I think needed to be looked at, and I think Dad recognised that at the time. And you know, I come through university, you know, accounting and finance background, worked in agency. It probably made sense at the time just for me to sort of start bringing in some of those, I guess, more disciplined approaches to the way in which the business was run. And so I found a lot of opportunity in that. And I suppose since that time in 2005, we've just gradually kept structuring the business so that it could, you know, the structure of the business and the way it's resourced and the way it's run keeps pace with our pipeline. I think it's a very mature thing to do. You know, often you see founders of businesses who probably take it or wait too long to actually bring that formality to the way the business is run. And I think it's just something you obviously recognised early in the piece that needed to happen.
And we've seen examples of businesses of this scale go and list on the stock exchange, but you guys obviously prefer to keep it as a privately run family business. Yeah. Why is that? What are the benefits of that as you see it?
Yeah, look, I mean, listing brings with it a lot of benefits, mostly access to capital. But if you look at our business, it is a business that is quite diversified. So it's very hard to pigeonhole us into a particular category. A lot of listed businesses, you need to be in the office sector, or you need to be a REIT, or you need to be a fund manager. You know, there's not too many examples where there are businesses that are diversified as ours in terms of the number of sectors we're in, and in terms of the fact that, you know, we have a significant portfolio of properties that we manage, which is very much REIT-like, but we're also very entrepreneurial in our approach to development, and that includes holding very large land banks, which is not well understood in the listed market. The other thing is the decision making. You know, as a private business, you know, we own every single one of our decisions, and we're accountable to ourselves. We're not accountable to other shareholders. It's not that we would necessarily find it difficult being accountable to other shareholders. We just think it would be very difficult for shareholders who are not working in the business to completely understand some of the decisions we're making at times, because property is one of those businesses that has its risks. We like to think we manage the risks really well. We believe we do, but shareholders in a business like ours, I think, would struggle to really comprehend what we're doing. So it does suit us to stay private. That means that, you know, we need to manage our capital position really carefully, because we're running predominantly with our own capital, and from time to time we use joint venture capital as well.
Sam Senior, I wanted to ask you, in terms of the growth of the Salta business, particularly in the 1980s, there was a lot of business people, as you're aware, that had big dreams, big ambitions here in Australia, particularly in Perth and the Gold Coast. How did you manage to ensure the business was stable throughout that period and you didn't get carried away in sort of overcapitalising on projects or getting carried away on expanding into Sydney or overseas?
Well, I suppose at that time the business didn't have the broad vision and exposure that we have at the moment, where we're in most of the property sectors. But if you think about it, we were probably the first to do industrial parks that were fully managed before Goodman's even started. And the way that really was working was that because of the growth of Westgate, which was a strong and very large logistics business, and it was national, we were having a lot of exposure to the users of logistics facilities. The companies that we were dealing with were companies like Coles and in those days Hearst, which was a multinational, global, huge business. And so they had a requirement. We decided that we'd do one thing. We'd go to them and say, this is a one-stop shop. We'll buy land, or we've got land, we'll build a warehouse for you, we'll run it for you, and you don't have to worry about a thing. And when you need to expand, we'll expand. And if it means a new building, we'll build a new building. And so that really was the way that the business really flourished in that period. We could read what our customers needed. A typical example is Coles were working out of one of our warehouses. We were advising them on a number of occasions that the warehouse was getting tight and it couldn't operate. But executives, being executives, busy every day, just weren't worried about the whole thing. So, and going back quite a few years then, I spec'd a warehouse that was 40,000 square metres, massive warehouse, knowing full well what the Coles requirement was, right? We got about halfway through it and I got this sheepish phone call from Coles saying, oh, by the way, what are you doing with that warehouse? Obviously said I had a number of interested parties. No negotiation on rent. How much is it that you want? Yes, I think we'll take it. Now, if you go back to, if it was a listed company, that would be fairly difficult to do. That was a punt, but punt that was, well understood. And so the property business grew and the logistics business grew. Once we sold that logistics business, we did find that it was a bit of a struggle in industrial, and we started to expand, and we had land banks that were very significant land banks that had been purchased over a period of years. So we went into residential, we went into commercial, and so now the business is very broad-based, far more complicated than it was in my day, but I think we've got the management and the strength in our balance sheet now to continue in the way we're going, and we've got some very, very big projects in front of us that are right across the spectrum of property.
And when you look at the current market today, can you believe the prices that some developers listed or private pay for industrial assets, particularly in the past 36 or 48 months, compared to what you were paying for sites and building industrial and logistics assets on several years ago?
Really, when I started, industrial was the down and dirty side of property, and the cost of real estate wasn't great at the time, and I would never ever have imagined in my wildest dreams that the industrial market would go from what used to be a cap rate of between 8 and 10% to a cap rate of under 4%. Unbelievable. But it's a journey that you go through and you see it all happening. We sold a lot of our industrial assets when we needed to sort of cash up, because as a private company we've had to build a financial base that was significant. No, I'd never have thought that it would go the way that it's gone, quite frankly.
Let's talk about the current market, Sam. Where are you seeing, or which sectors of the market are you seeing the greatest opportunity in, and are there any sectors of the market that you're avoiding?
Well, I think we're very fortunate at the moment to be in two of the sectors that I think are really performing the best or have the most focus on them from a lot of the capital that's seeking a home in property. That being the sector we've just spoken about, the industrial sector, which everyone now calls the logistics sector. It's a bit more sexy. Look, we have a huge pipeline in the logistics sector. Land that we have identified, 15, 20 years ago that we could see was going to become prime industrial land. So that's one of the things that we do as a private company. We do look a long way out, and sort of adds to the answer about why do we not list. It's very hard to be buying land 10, 15 or 20 years out if you're a public company, but certainly that's an area that we've always sort of been pretty good at, is identifying the right expansion areas and finding the right pieces of land. So we're very well placed in the logistics sector, and as we've just touched on, it's a very hot market. The other sector is build to rent. There's a lot of talk about build to rent now. There's a lot of new projects being announced, a lot of new players, and a lot of capital coming into the build to rent sector. It's actually something we've been looking at for the past 5 years, and we've been intending to, or we've been planning to enter the sector for the last 5 years. So we've got a pretty big pipeline of build to rent assets. We've got about 3,500 apartments in our build to rent pipeline, and we'll start construction on our first asset early next year. So I think they're the two sectors that I think at the moment have the most focus on them. There's been a lot of disruption obviously in the market through COVID, and that's why there's been this huge interest in the logistics sector, because we've just seen that any business that's involved in the procurement and distribution of goods, so really that stretches from being a logistics company right through to retailers, and their demand for that sector has really skyrocketed, and hence why that sector's done so well. Other sectors that are still sort of, if you like, got question marks against them. A lot of people ask me about the office sector and what's the future of office. And I think through the pandemic, what we've discovered, I think, is a new appreciation for what the office actually adds. And we're certainly seeing that in the inquiry levels that we're getting. So if you go back 12 or 18 months, everyone's sort of suggesting that office may be dead, or certainly its prospects were going to be severely diminished. We're certainly not seeing that. We're seeing businesses really rethink the way they use their office space, the importance that they're placing in the office as a place for collaboration and creativity, intermingled with a lot more flexibility around coming in and out of the office. So we're actually now coming out of COVID quite positive about the office sector, whereas go back 12 or 18 months, we were probably thinking, where is this going to head? And equally, I think, and we don't have as much exposure to retail. We only have a small exposure to retail assets, but I think COVID has brought forward the understanding around how retail and online can intermingle and how one needs the other. I don't think the solution is all online or all bricks and mortar. I think very much both sectors are necessary. And I think we've just seen that in the rebound with people coming back into shopping centres, and it's an outing, it's entertainment, it's enjoyment, and people do like to touch and feel what they're buying, but they've also got the online option. So I think COVID, there's still a lot of kind of question marks to get the answers to, and I think we'll see in the next 12 months just how some of those sectors really start to settle post-COVID.
And you mentioned the build-to-rent sector there. I just want to unpack that for a minute. So you've got about 3,000 apartments, I think you said, 3,500 in the pipeline. There's been some developers who swore they would never get involved in it, and 12 months later they're quite heavily involved in it. Other developers sort of have always looked at the sector, always been intrigued by it. How have Salta Group made it work without giving too much away? But
oh, look, I don't think there's a particular magic to it. I think if you go back a couple of years ago, your returns that you would generate out of the residential sector from an income point of view, we all know where residential returns sit. You're sort of in that 4 to 5% gross return, which a net return, you take off 30% of that return, and that's where you end up. And then you compared that to where logistics assets were at, or where an office asset was at, and there's quite a significant difference in the I guess income return that you could earn out of a project. We could see that there was going to be a bit of a convergence in returns across those asset classes, and that's exactly what's happened. And in fact, if you look at, we were just talking about industrial assets being sub 4% yield. Well, actually there's a better yield out of build to rent at the moment. So I think a lot of the market has moved that direction for that reason. The relative returns out of build to rent compared to other asset classes are now looking more favourable. For us though, it's also about diversification of our income streams. We have a lot of exposure to office and industrial. And part of the reason why residential returns historically have always been lower than other asset classes is because actually it's a lower risk asset class. So risk return, what are you prepared to accept for a lower risk? And so that's why we've been on it for the last 5 years. We've sort of been planning our build to rent pipeline. It's not a new thing that we've done because of COVID. It's actually something we were doing well prior to COVID. And we just see that it adds stability into our overall investment holdings. You do have big exposures in industrial and office. It's a little bit like what retail used to be, and I think will again be considered, where you've got a larger number of smaller tenants. Your vacancies are not likely to be as high as if you lose a significant tenant from a large industrial building. You have a big hole in your cash flow. So I think the market's starting to understand and recognise the advantages of build to rent. And I think finally, there's capital out there that actually understands build to rent. There's been a lot of work done in Australia around understanding the sector, and I think both equity capital and debt capital is starting to understand the sector a lot better, and hence why there's a lot more investment into it.
And regardless of investing in different asset classes or sectors, I'm interested to get a gauge on the fundamentals that you look at as a team. What are the core metrics that you analyse?
Look, I think one of the strengths of this business over the last multiple decades has been our willingness to actually try to read the trends and position ourselves with land banks that we know will ultimately be sort of best of breed land banks for the particular sector. So that's something that I think that we've always tried to do really well. We're very patient. We're able to support buying and holding land because we've got our investment portfolio that supports us doing that. But essentially, it's no different to the age-old thing that location is property. In property is the most important component, and we just try to get in front of the game because it's very hard to buy prime locations once everyone knows that the location is prime. So what we try to do is figure out what's going to become prime well before it does. And that's something that I think, fortunately, we've been successful in doing over the last 50 years. We've been in business. I've been in it for 22, but it's 50 all up, a bit more than 50 now. And that's definitely a strategy that we've always employed, and it's been our most successful strategy broadly since we started.
Now, Sam Senior, it would seem that a common theme throughout your career is your sort of obsession on customer service and delivering a great customer experience. Where did that come from, and how important has it been through the business's journey in terms of the success of the business?
Well, I suppose I'll give you a 2 or 3 word answer to that, but I can then qualify it a little bit further. No customers, no business. So it is very, very important to understand your customers and to service them in the way that the representation has been made. And my very early career was in sales, pretty much. My first job was with the Myer Emporium as a sales cadet in their occasional furniture. My second job was with a company called Miles Laboratories, which was a over-the-counter pharmaceutical company, made things like Alka-Seltzer that used to be quite the rage at the time for people that had drunk too much. before that, my second job, that was my third job. My second job was with a company called Style Girl Hosiery, which was the era when the ladies started to wear pantyhose, and I was involved in the sales of that sort of product. So they were all quite diverse. Then I went into the pharmaceutical area, which was Miles Laboratories, and then it was Herxt, which was also a pharmaceutical company and an industrial company producing plastics. So most of my early days were spent in selling and doing courses about how to sell and how to win friends and all the sort of things that used to happen with Dale Carnegie courses. And so you really do get an understanding of where the important element is, and that important element is you've got to know how to present yourself, you've got to know how to sell, you've got to have an understanding, or effectively an empathy, to understand people's body language. And I mean, there is nothing worse than a salesman who is like a record and you can't shut him up, which means that the person he's talking to doesn't get a word in edgeways. So it's that sort of ability to sort of have people come into the conversation and then talk back to them that creates that relationship and that bond in the interview or in the discussion that you're having. And so that's just something that you acquire over a period of time, and very, very important. That's how you keep customers, and that's how you make customers, and that's how you grow businesses.
And one of the things that I found most fascinating in reading your biography was, and you've mentioned it today as well, that you've always taken calculated risks. Although when you're in your mid or late 20s, you were buying essentially swampland and then building on it. Other people would say that as a very risky sort of venture. What made it less risky in your eyes? What did you see in that potential that others didn't see?
Well, first of all, I didn't have any money, so I couldn't buy anything else. That was, without a doubt, the main motivator. And so what do you do? We're trying to start a business. The business that I wanted to start was to build a warehouse, because I'd had that exposure at Herxt. And my father had a small garden supply business that was worked out of the back of our house in Altona where we lived, but then he decided to move it out and buy a piece of land in Williamstown. He bought, I think it was a 1/4 acre block, to sort of expand his little business. I figured that I should buy everything around it. That was the swampland that I was buying in case he had to increase his business. And of course, having had that piece of land, which it was a 1920s subdivision that had no roads, no sewage, no storm water. It was just land. And a lot of the land that we bought was very, very cheap, because the people that owned it were people that had inherited the thing over generations, and it really wasn't worth anything. And so when I bought that, because of my father's business, he had a lot of contacts with contractors, because he was selling sand and screening to people who were doing construction work and road works. That the idea came that if I buy it, I can get it filled fairly cheaply, and the value of it can be re-rated once you've got it filled and looking pretty good. And so that's the story of buying the swampland, which was actually the start of the construction business, and that's where we built our first warehouse.
Just on so you had a development business and a construction business, but over time and accelerated under Sam's leadership has been this sort of diversification that's always underpinned the company in terms of whether it's commercial assets, industrial assets, residential development assets. What's driven your thinking in that regard? Because it's quite unique. Often you'll have developers that just do industrial or that just do high-rise residential, but you were sort of ahead of the times in looking at different assets.
Well, as you would know, property's cyclical, goes in cycles. Residential is going, but industrial isn't. Commercial is going. So we're very, very fortunate that we don't have one sector, and if that slows down, then we slow down and we're not in anything else. Now, we can move, and we still do now move, from one part to another. So we'll go from commercial, gets a little bit tight, residential is firing, or industrial is firing. And so the benefit of being in all of the sectors is that it gives us that ability. So we never have people sitting around doing nothing because we've got nothing to do. And I think it's a mainstay, it's been a mainstay of the business. It requires, a lot more work, and it requires Sam and his team to be able to go across all of the sectors. But I think that is a very strong position that we have in being able to do that. I think you'd agree.
And Sam, in terms of leadership qualities and corporate culture, how have you managed to adapt that or at least accelerate that over the past 16 years?
Yeah, well, I think as businesses grow, you've really got to be very mindful of your approach to leadership because your role changes. Back when I got into this role, into the managing director's role, we were probably a team of 10 or 15 people. So the way you interact with your team, what your actual role is in that function changes as you grow into a much bigger business with more parts to your business and more people in your business. And your actual role changes too. The title hasn't changed, but your actual function is very different. And I think one of the big things that changes as you grow is the way in which you have to grow into leading a team, because you move from being very hands-on in a lot of things to sort of gradually becoming more and more hands-off in terms of the day-to-day tasks that you might carry out. And that's obviously quite logical because as the business grows, you bring more people on and you sort of, you're delegating those roles out to others to carry out. So it's really critical to adapt your leadership skills to be one of, a motivator and a confidant and, an educator, and but also importantly, and one of the things I found is really understanding that some of the people we're now bringing on have got far more experience than I've got in some of the things that we do, and so there's a huge amount of learning from them as well in reverse. So I think that's what happens as you grow into a larger business and your leadership skills change. It's about a two-way sharing of knowledge and information and skill sets that you've got to learn to do. And I think the most effective leaders are the ones that do that. They sort of understand that actually, whilst you might be the leader of the business or the CEO or the managing director of a business, you're probably not the most experienced person in everything that the business does. And it's impossible for anyone to do that, actually, particularly as you diversify like we have. So I think that's one of the things I've learned, just the value of bringing really good, passionate people in, giving them enough scope to carry out their role and come forward with suggestions about how they can add value to the business. And giving them, I suppose, the opportunity to do so in a way that they feel safe to do so, and then working with it. So I think that's the biggest change for me, in the 16 years since I took on the role.
And vice versa, what do you think are the qualities that attract? I think you said you've added about 20 staff this year alone to the business, or over the past 18 months. What are the qualities that attract candidates to the business, whether at the top end in a management perspective or just starting out?
Look, I think we're fortunate to be, in a way, a little bit of a niche business in a sense, in that we're still a family-run business. We still have a lot of family values, and the family value statement, which is up on the wall here, is something that we try to live by and we try to sort of permeate throughout the business. So we've very much got that. We've still very much got that entrepreneurial mindset about us in terms of the things that we're doing. But at the same time, we've grown to be of a scale that, is of a sort of a small institutional nature. And the way in which our decision-making processes therefore reflect that entrepreneurial business with a bit of structure, but with the sort of the balance sheet and the kind of the investment ability of a small institution. So we've been able to bring on a number of people who've come out of larger businesses who've, I suppose got to a certain degree fed up with the red tape that exists in some of these big businesses. We still make very significant decisions in days. We'll make large acquisition decisions because myself and my father and our board can make really rapid decisions. But as I said, we've still got that family flavour to us, and we like to think that that's we're trying to find that balance between being a family-run business, entrepreneurial, but structured, with plenty of investment capacity. And I think that puts us into a niche that there's not too many that fit into that.
Now, the Salta Group business has been involved in many landmark projects right across Melbourne for decades now. One in particular would seem to me that put the business on the map from a general public sort of perspective was 150 Clarendon Street. Reflecting on either projects you've done or projects you've got in the pipeline, walk me through some of the ones that really stand out and where you see the business sort of going in the next 5 or 10 years.
I think where we've been really successful is in our large precinct style projects. So 150 was a unique project, a unique site, a unique product, something that can't be replicated, and it's been a fantastic project for our overall brand reputation in that high-end residential market. But probably the things we do best is where we're able to buy very significant land banks, as we've been talking about, and create a whole precinct. So Victoria Gardens in Richmond would be a project that I think a lot of people know of. Not everyone will know that it's a Salta project, but we were able to aggregate almost 35 acres of land in that location, and it's now evolved into a very significant mixed-use project, with office, and retail, residential. It's a location for a significant pipeline of our future build-to-rent residential as well over the next 4 to 5 years. So I think that's been a really important project in our history. I think if you look at some of the things that we've got that are currently underway, our Nexus Corporate Park out in Mulgrave, where we currently have 60,000 metres of office space that's already been constructed, and we've got roughly another 60,000 square metres of office space left to go. But it's another really good example of just how where you actually can control a whole precinct, and you can gradually deliver buildings over time, that each time you do the next building, you improve on the previous one. You're able to add value across the estate in terms of the types of amenity that you're providing to your clients. And if you look at Nexus now, it's very much a garden environment. We have basketball court on the roof of one of the buildings. We have a tennis court on the roof of another. We've just put in a running track and an outdoor gymnasium, plus all of the other amenity that you can have in a precinct-style development. And then from an industrial point of view, our Dandenong South project is obviously another very important project in our current and future pipeline, where we have 185 hectares of land out in Dandenong South. That's land actually that we purchased 15 years ago. It was zoned rural at the time, so we've gone through a whole rezoning process. We've put the infrastructure in, and now it's also the location for the future Dandenong South intermodal terminal. But again, it's a precinct. We've put all the roads in, we've got multiple buildings that are going up on that estate. We control the landscaping, we control the design of the roads, we control the parklets, we control the amenity. And I think that's where I think we do our best work, is in long-term master plan precinct style development. And there's a number of examples of that in our history that we've been very successful on.
Sam Senior, just in closing out or coming to the conclusion of our discussion, based on your career and reflecting on all the experiences that you've had, is there anything that you would have done differently?
Quite frankly, I don't think so. I think I've had a pretty charmed business life, to the degree that things all went very, very smoothly right from day one. But I think one of the real contributors was the start of it all, which really introduced me to multinationals. And I make mention of the GFC that we went through some time ago, where all of our buildings were leased to blue chip, or pretty much all of them, I mean not in total, to multinational businesses and large businesses like Coles, which has created the stability that we've needed all the way through. Would I do it any different? Maybe I wouldn't sell my industrial assets as early as I did and wait for the 3%. But apart from that, I think I've been pretty charmed in how the way the business has evolved. And with the kids now coming in, it's sort of just continuing to sort of improve and grow. So, and no regrets coming to Australia, quite frankly, other than first day I went to school. It was a bit difficult.
What keeps you busy and active today? Obviously, the team tell me that you're a regular presence here in the office. You're in at least a couple of days per week. You've got the olive grove down on the peninsula. What are you most passionate about today?
Oh, look, I think I still have a very strong passion for the business. I mean, old habits that very hard to sort of get rid of, and I do come in but I don't get involved in day-to-day management to a degree. I mean, occasionally I sort of cross the line, but not often. But certainly in a directional sense, you know, I have my say at the board. I believe that you've got to run a board, you've got to run it in the right way, rather than, you know that you may have the capacity to change the way the board is thinking. It's got to be worked in the right way.
Sam, and a few just to close out our discussion from your perspective. One that I wanted to ask you about, one of the trends that we saw last year was the big debates that went on between landlords and some of the national retail groups arguing over new models. Do you have a view on that at all?
I'd like to end with a tricky one. Look, last year was unprecedented. 2020 was a year that no one predicted, and I suppose if I'm realistically sitting on both sides of the fence, I can understand that, you know, retailers who say, well, I'm forced to close my shop and so therefore I shouldn't pay rent. I can understand to a certain degree where they're coming from. However, I think that a lot of those retailers were able to pivot their businesses in different ways, and online was a big part of their solution. Click and collect was a big part of their solution. A property owner whose business essentially is renting space in return for rent can't necessarily pivot. I mean, we couldn't take that space because it wasn't used by the retailer and use it for put it to another use, because the retailer was still occupying it. Their doors might not have been open. So I think that there was a lot of sympathy, quite rightly, for the retail sector. But I don't know that, or I don't necessarily agree that the measures that were put in place were entirely balanced in terms of thinking about who couldn't pivot their businesses in a way that would protect their well-being of their business. And I think there were some examples where, you know, there were, you know, some retailers who actually became more successful because they were able to pivot successfully. And, you know, maybe their argument would be, well, you as a property business, well, why didn't you pivot? Well, okay, how do we do that? You know, we've leased you the space. We can't pick it up and move it to another location, or, you know, we can't put another tenant in it while you're occupying it. So, look, it was a pretty difficult time. I think, you know, if you had your time again, some of these rules need to be a bit more nuanced. I mean, we were for customers that we knew had no other resources, you know, a lot of the smaller retail businesses, and they had no revenue stream. We were first on the phone to actually say to them, look, yeah, let's figure something out, because we know that it's not sustainable to continue to pay rent or full rent. But on the flip side, there are a lot of others who had the capacity and also had the ability to pivot, who I think took advantage. So I think next time around, if hopefully there isn't a next time around, but you know, if something like this were to happen again, I think the key is to make sure that the relative interests are properly considered and the solution is properly balanced. Because I think in the rush to do things, I'm not so sure that the balance was entirely right.
I want to qualify that, because I am very sensitive to that. And we had a balance, you know, you need a balanced scorecard. Yes. We gave rent abatement, but we didn't get any abatement in terms of our capacity, of our interest by the banks. We didn't get any concession in terms of rates and taxes and land tax. The government kept coming out and saying we've all got to share the pain. Well, I couldn't see any sharing of the pain, because I got no land tax, I got no stamp duty, I got no interest abatement from the banks. So it really was fairly unbalanced in the way that it was done, and I think this is what Sam's referring to.
And one last one, and I promise it will be the last one, and it's really a question for you both. Obviously, Christine was honoured with a Member of the Order of Australia earlier this year in support of her services to philanthropic causes. How important is that sort of division of the business, giving back to the community?
Look, I think we've always had a level of, I suppose, appreciation at the needs for philanthropy. We have recently sort of become more formal in this, and we are dedicating a certain percentage of our business to that philanthropic fund. A lot of it was, I suppose, the instigation by my wife, who was very strong on this. I mean, she worked very, very hard for St Vincent's Institute, which is the institute that she supports over a number of years, and has been responsible for, I suppose, significant financial benefits that she's delivered for them. So, you know, it's now over to, we have a family board, we have a philanthropic fund that we sort of put funds into, and then we make the decision as to who we spend the money with or who we give the money to. And Sam and Lisa and David and my wife are all involved, and Sam's wife, Carmen, as well.
Well, it's been an absolute pleasure speaking with you both this afternoon. Thanks so much for your time, and look forward to seeing the next chapter of the business. Thanks again.
Thanks, Rob.
Thanks, Rob.